Take a look at Adobe's quarterly financial metrics. Every single quarter, revenue has increased, gross profit has increased, and the net margin has been sitting at around between 23% all the way up to 29%, varying quarter to quarter. But look at their gross margin. That is super stable at around 85%. We're looking at a stable and predictable digital monopoly, which has great future prospects, it has solid margins, and it has an amazing cash flow generation. So let's jump straight into it. So Adobe, the king of digital media. Well, Adobe in their annual reports refers to themselves as one of the largest and most diversified software companies in the world, and I have to agree with them. They say that their products are used by creative professionals, including photographers, video editors, graphic and experience designers, and even video game developers. They market their products directly either to enterprise customers. They also license their products directly to end users, either through the App Store or through their own website. And they also have third-party distributors, which will distribute their products in exchange of a small fee. One thing that this company did great a couple of years ago was changing their products to a software as a service model. This is amazing because it means that all their products are subscriptions, and this is insane for free cash flow generation and for predictability. And this company is the king at doing that. So this is just a quick look at their income statement so you can see how they are divided into. The biggest segment is digital media, which has a 96% gross margin, and it is the fastest growing one, which is good news because it means that their gross margins will be increasing. They also have digital experience and then publishing and advertising, which is the smallest one. But look at how small the cost of revenue is for all of this. This is what we're looking at, and this is what a monopoly looks like. Their operating expenses have been increasing, which is the reason why their net income margin, the one we're looking at, wasn't increasing or being as stable as the gross margin. However, I believe that a company with the experience and the talent that Adobe has, if they ever wanted to reduce operating expenses, they could conduct a project like Meta has just done and improve their bottom line substantially. But their financial analysis is where this company gets interesting. They have an insane return on capital employed of 23%, which is great. They have an amazing interest cover of 60 times, meaning they can pay their interest 60 times over with their current EBITDA, meaning that they basically have zero liability risk. They have great cash conversion, meaning that they're amazing at generating free cash flow, which is what us investors like to see in a company. And then of course their profit margin 88%, their operating margin 35%. This company is incredible. This is the evolution of the revenue for the past 5 years. You can see that in 2018 it was 9 billion and it has doubled in 5 years up to 2022, sitting at around 18 billion. Their only problem of course is the net profit hasn't increased to the same pace, but this has been either due to the inflation of salaries because they do need a very talented workforce. However, as I said, this company has no trouble at cutting expenses. If they ever wanted to become leaner and improve their net profits, they could just conduct a project like Meta just did and improve their bottom line. So I'm not worried about that. And in terms of the fundamental analysis, this company gets a perfect scorecard. It has low liability risk. It has one of the most solid balance sheets you can imagine. It is incredible at generating consistent cash flows, and it even conducts small share buybacks. This company can also produce great organic free cash flow growth as we have been seeing, and incredible revenue growth. Their only problem is that they have to match the revenue growth with their net income growth, but I do believe that in the future they will be able to do this. And now, this company has one of the greatest moats and competitive advantages you can see out there, which is why they have strong pricing powers. This company is one of those companies that is able to increase their prices above inflation without even giving a reason to their customers, and their customers will keep purchasing their products. Why? Well, because when you think of editing pictures, the best product that comes to mind is Photoshop instantly. And they have managed to do this with years and years of innovation and by investing so many resources into improving and constantly updating their offerings. In terms of the long-term analysis, they have two main avenues for growth. The first one, which they're already doing, is existing offering improvement, and they are currently spending a lot of capital into having a big team which focuses on giving updates to their different offerings, improving and making sure they stay ahead of the game every single year. The second one is also providing new offerings. This is the toughest one because creating new things is also the hardest thing to do. However, they are also investing heavily into this. We have no news of any new offerings like they could be bringing to market soon. However, I do believe that a company as innovative as Adobe will have no trouble at creating new products or new offerings that are in line with what they currently do. This company is great because it follows secular trends of digital media. It is now using integrating AI into their Photoshop and other offerings, and it's a software company, which is where the largest growth is right now in the world. In terms of valuation, this company is impossible to buy it at a low price. It's always trading at a huge premium, but because this company, let's just face it, it's one of the best companies you could be investing right now. Look at that. In the past 3-4 years, the cheapest you could have bought it at was a 35-34 PE ratio. It's currently trading at 50 PE ratio, and this is not a bad multiple for it. However, I do believe that it's trading at a heavier premium that it usually does. In terms of free cash flow yield, it's trading at around 2.67% based on 2022 numbers, which were a bit higher than 2023. So this free cash flow yield will be a bit lower, meaning that it is not a hugely attractive price in terms of when comparing it to the long-term inflation rate. However, I believe that for a company with such a good quality as Adobe, this could be considered a good price or an attractive price if you're looking at holding the stock for around 10 years or so. Now, risks and possible challenges. The only big risks that I see is first competitors. Since this is a hugely profitable market, there are a lot of competitors currently entering and trying to compete with Adobe. And since innovations are coming so quickly with AI, it could be easy for another competitor to steal market share from them. However, I am being very conservative with here. That's why the risk is so high. Regulatory and performance, I see no trouble at all. In performance, especially because they have a lot of recurring revenue. And in terms of market, I do see that if there is an economic downturn, which I don't think there is a high chance of that, their revenues could be impacted because the company is a bit cyclical. However, I am being very conservative and I think there are no possible risks and challenges in the near future. In terms of an investment conclusion, now moving on to the investment conclusion, first remember, I'm not a financial advisor and this is not financial advice, but if I had to give an investment conclusion, I would say that this company has a super strong competitive advantage, has incredibly consistent cash flows with it, which are highly predictable and extremely resilient, and it has one of the highest returns on capital employed for a company of its size, meaning that it's great at creating value for the investor. So in my eyes, this is a great company and a great investment, which will probably provide high returns. However, I will sit on the sidelines until the price falls a bit because it has risen around 80% in the past year. Thank you for watching. As always, this has been the Cashflow Compounder. There is a free Patreon link for extra content down below, and there is a link in bio for a free stock if you join Trade Republic or Trading 212.